Forward to the cloud in 3. Hey everybody, I'm your host Jedi Hill. Today's special guest is a business line manager for plastic additives, so he's an expert in sales and managing his crews. Thank you very much for being on, Steve Alessandro.
Hey Jedi, thanks a lot. Glad to be here and looking forward to a good discussion today.
Oh, I'm totally excited for the discussion here. Now, I all met Steve through my fiance Anna. And the plastic additives is really cool because, I'm working with using the plastics to build the islands. So it was really cool to meet. And I know Steve here is an investor, especially in the stock market here. So might have some good tips for y'all later on. But what does a business line manager really do?
Yeah, so what I'm responsible for is the sales and marketing of our additives into the plastics industry for North America. So I've got a sales team, oversee, some of the marketing effort, and then also have a small lab team just outside of St. Louis that develops new products. So I've been in this role probably 3 or 4 years now, and had a similar role within the same company with a different group of end customers outside of plastics. So, the company I work for sells additives into a variety of industries, paint and coatings, printing inks, metalworking fluids, mold release. So really a bunch of industries. I bet many people listening, all people listening, have our products in your house, car. You see it around every day. You just don't know it because we're the stuff that goes inside. But yeah, in terms of what specifically it is, I mean, really, it's managing a sales team, keeping a pulse on the business. So it's really upward and downward communication. So, taking the company's goals, creating goals for the sales team, and then in terms of managing the business, really understanding what's happening out in the market, and then getting feedback from the sales team and, providing information to management as well so that, they have a pulse on what's going on in the markets. And certainly the last, 2 years plus have been quite dynamic in terms of overall supply chain issues, inflation issues, varying levels of demand issues. So certainly unprecedented in the last couple of years.
Well, I know we had all the droughts and things, and you mentioned to me from prior conversation. Can you go into some of the supply chain issues you guys have had with the rivers and everything else going on?
Yeah, there's been lots of different things, and it seems like any one thing can happen at a particular time, but we've seemed to have a few events over the last few years that's really created, let's say, just an avalanche of different things. And if you rewind the clock back, to when we had the first lockdowns coming out of the COVID pandemic. And so what happens is basically everybody went home, some industries stayed open, and you can argue whether the government response was appropriate or not, but the reality was, a lot of money was pumped into the economic system, not just here, but globally. And, obviously, if you think back to then, a lot of the entertainment venues were closed. I mean, sporting events, had cardboard, cutouts of people in the stands. Travel was greatly reduced. So a lot of things people spent money on weren't available. So what
you stuck to the basics.
Then people bought stuff. They bought stuff online. They bought, hey, maybe we'll get a boat. Maybe we'll get an RV. Maybe we'll put in a swimming pool. We'll paint our house. We'll, do these different home projects. And what you saw, early on as, we worked through got past the lockdowns, all of a sudden this huge demand in goods was created. And with that,
lumber went up insane. Like a sheet of plywood went from like $20 to $100.
Oh yeah, everything was shooting up like crazy. And then you started to have, global supply chains. So now everybody's ordering more. Everybody wants more material. And it created, essentially a massive backlog in shipping. Not only did you have effects from, different ports being, closed or reduced activity, to, not enough container ships. And, I think you recall all the log jams at the various ports of Los Angeles, ports of New York. Now most of those things have filtered their way out, but as time has gone on, you've seen these kind of big lumps come through the economy. And most recently, it's kind of manifested itself in inflation, which for the previous 10 years, we've had very little price increases in the market. And in the last 2 years, I mean, there's just been massive price increases across the board to basically respond to all that demand that was out there.
Oh yeah, you print 40% of the global money supply in a year and a half, you're going to have huge inflation, and it's way higher than what the public numbers are being told.
Yeah, and for sure. I mean, and we're starting to see things slow down. I mean, the inflation print is still a positive number. So even though they say it's slowing, it's still a positive number. So I think the CPI print last week was a little over 5, and again, let's just assume the metric is the metric that they're using. I mean, the target, is to get it down to, 2 to 3%. I think, again, my opinion only, it is a matter of, where does the economy stabilize, and, is 3%, where it stabilizes? Does it get back to 2? Is it 4? I mean, somewhere there'll be somewhat of an equilibrium when that shakes out. What that number is and when, it's you might as well have a magic 8 ball to figure that out.
That would be nice to have one of those that actually can tell you when the market's going to stabilize, right?
That's actually right. I think back to, remember was it Back to the Future 2 when what was it, Biff found the book that had all the sporting results
bettings,
from history. Yeah, he was able to amass a fortune. Yeah, if it were only that easy.
Well, and there's so many factors into it now for the supply chains. And we had the droughts last year, which made it to where you couldn't even navigate up the Mississippi and had to move stuff from the barges to trucks.
The company I work for, interestingly enough, is based in Germany, and there's been issues with the Rhine River being low and not being able to have boats go through. And we've also had crazy things like that ship that essentially jackknifed in the Suez Canal that caused massive disruption. So, certainly there's these unpredictable events that happen over time, and you just do your best to adjust as things happen.
Yeah, and you got to adjust, and think times are going to keep changing. We don't know where they're going, and we can look at things like the bond market to have ideas.
Yeah. I think there's, a lot of things when I think about is if we talk about investing in a little bit in terms of, a balanced portfolio. And again, I think of, no one really knows the future. And actually some things I've read from Ray Dalio, his approach is really to try to take a pretty broad approach in a mix of, equities, bonds, treasuries, commodities, gold, because you really don't know day to day where things are going, what events might occur that might drive one particular part of that segment or another. So, I mean, ideally to be well spread and diversified, will help even out, returns over the long term. But again, I mean, any point in time, you can point to a particular, set of, whether it's the bond market, the stock market, the gold market, the commodity market. I mean, they can all be swinging one way or the other, and in some cases against each other. So, I mean, I like to take a balanced view. If you have a little bit of every pie, you may not shoot up like a rocket ship, but you also won't crash as fast as some things do.
Well, and Warren Buffett's rules are don't lose money, don't lose money, don't lose money.
Yeah. Exactly.
And in these volatile times, because commodities are spiking and dropping, everything's going up and down really quick compared to a steady up or down like it usually was.
Yeah, and I think that's where you see like the big hedge funds and things like that, and what they're trying to do is to balance that out so you don't have the big swings, because if you're a ultra wealthy investor, you're looking for predictability, or if you're a pension fund, looking to get some returns, for your pensioners, you don't really want the big swings, that causes massive problems. So, they're looking for strategies that are more balanced, and maybe you're not going to grow as fast as the high flyers, but at the same time, you don't see those big swings. So again, I think it just depends on your time horizon and your aptitude for risk, and really what you're willing to want to get educated about and spend time on.
Well, yeah, and find your custom area. What works for you? Because what works for me might not work for you. Like personally, I don't go into any of the stocks or whatever. I like real physical assets like the real estate, the gold, the silver, hopefully eventually farmland, things like that can't be printed by the Federal Reserve.
Yeah, absolutely. And I think that's what really gets to the heart of being, in investors, really understanding, where you want to focus your time, and structure your investments. And there may be some things where, hey, I, want to have a portion in equities. I mean, there's a way to do that very cost effectively, through exchange traded funds. You can put some money in there, kind of set it and forget it, and let it just kind of ride there, and focus attention in other areas. So it really depends on the individual, and also what interests, the individual. I mean, some people, may, take a high interest in stocks, and, kind of treat that as their hobby, and they, study the charts, and they read, earnings reports and stuff like that. And others, like yourself, it says, hey, I really want to focus on, the real estate market, and put effort into there. So, there's not a one size fits all, in my opinion. And I think it's a matter of just, adjusting to what you feel comfortable with. And then I would say just learn as much as you can about it. And that way you're making educated decisions, and not making decisions based off of, things that are, in the news of the day, or something like that, which invariably you're always going to be behind the curve if you're, reading. Well, if anyone reads a newspaper anymore, but back in, when I was younger, if it was in the
Wall Street
newspaper, you
Journal
were
at the door every day.
What's that?
So I miss having the Wall Street Journal delivered to the door every day, but everything's
Exactly.
online.
By the time it's in print, even now, by the time it hits, even Twitter, or anywhere, your blog posts that make news, the market's already adjusted. So, it's really looking in the rearview mirror if you're just, getting off of different various sites, and then trying to make investment decisions from there.
Well, and there's many paths to the freedom that you mentioned there from the different aspects of that. I know a lot of people are starting to be more cash heavy that I talk to for other investors, or they're doing the short-term treasuries. So, they know they're losing money because inflation's way up here, but at least they're not losing as much if they just held cash.
Right. Yeah. In times of higher inflation, yeah, the cash under the mattress, just doesn't work anymore. I mean, it's essentially, a time tax, as it eats into your, cash assets. So, it's always one of those things that's hard to judge. Again, is, times when investments seem attractive, it's great to have cash ready to go. But again, you've got to prepare for that, and make those, decisions earlier, so there is cash ready to commit. And I think it's situations where, if people are invested, pretty heavily, and then unfortunately when it comes time for opportunity, there's not a lot of cash sitting around, at least, from the individual investor, I think that's a common situation. As you mentioned Warren Buffett earlier, I mean, he has the luxury of having many, billions and billions. So it's a lot easier to sit on a pile of cash waiting for a good deal when you have, plenty of income coming in from other sides.
Oh yeah, last I heard, even with his recent purchases, he's still over like 130 billion ready for the next market downturn, because we still have the Fed is still raising rates, and the market's trying to fight the Fed and thinks it's going to pivot. But I still, personally, I see, like, because OPEC just reduced oil production by another 1.5 million barrels, which is going to keep gas prices elevated, which is going to keep inflation elevated for food and fuel and things that the average person uses.
Yeah, for sure. I mean, it's a very confusing market out there, more so than usual. It's normally confusing, but this makes it extra confusing what's happening out there. And quite honestly, that's like we've talked before, is you never really know what's going to happen. And so, that's why I like to think, at least personally, I don't offer financial advice, outwardly, and obviously I'm not a financial advisor by background. So, but I think of the consistency over time. It's like pick an investment strategy and, just stick with it, and if you're, buying in, exchange traded funds, if that's your way to go, if you're buying into various bond funds, I mean, over time, they all swing up and down. I think what's happened in the last, 10 or 12 years, really since 2008, we've lived in a, let's say, not normal environment with rates being extremely low, which is really unprecedented. And if you look back in history, there was a lot of swings and up and downs. And so that consistent investing, has really worked over time. The last, let's say 10, 12 years seem to put more emphasis on, more speculative assets because money was essentially free. Well, money's not free anymore.
Well, yeah, because for like the real estate, okay, and our house is at, a 2.99, and there's some people that are even subpar too. And I remember my parents, when I was a kid, they were so excited back in the late 80s to refinance from like 15-16% down to 9.99.
Yeah.
People would die today if the base rate was that, even though we're still dealing with that in the commercial side for things.
Yeah, exactly. And it becomes, somewhat relative as well, because back then, pay increases were higher. They used to have, maybe COLA increases, cost of living increases throughout the year. So, I think what's happened now is that rates have shot up so fast, to a level that maybe back in the 2000s, people were comfortable with the, 5 or 6%, federal funds rate. But, now it's just, you've gone from nothing to, 5% overnight. And, it certainly puts some stress on some assets out there, certainly affected, bonds, maybe more strongly than in the past. So, it becomes a whole relative discussion of where things are and where things can stabilize. That's why I think stability will provide more comfort to the market, or even a smaller window of variability.
Right. And other side of that, for the interest rates, we have the amount of debt the U.S. government has created just since 2008 till now has more than doubled the national debt.
Yeah, for sure. It is concerning, how much debt is being put on. Again, it's no different than other economies have done, I guess, because a lot of other places have started to do that. But for sure, the ability to repay that and, service the debt is going to be a longer term issue. And, certainly something that, not to get into the political side too much, but, certainly something that, the Congress and administration, need to take a serious look at. I know that's not so much fun for the headlines, but it's certainly something that needs addressed, and really need to think about that on a long-term basis, because again, it needs paid back eventually.
Well, even a
Whether it's
short-term
our
basis.
generation or the next, it's still going to be there at some point.
Well, even on the short-term basis, like a third of the national debt is supposed to not reallocate, but re-up where they
roll
roll over this year. So that's going from 0%, 5% on most of that, or near zero. And that's going to increase the debt payment significantly. I think we're going from like 800 to like 1.4, 1.5 trillion.
Yeah.
Just in debt payment.
Sure. Yeah, I mean, and really, it has to be paid for one way or another. So, I hate to say it, but in my opinion, I mean, it certainly looks like taxes will be a part of that equation one way or another. So
even the hidden tax, the inflation staying high.
Yeah. I mean, and all that, to your point, has a drag on the economy. I mean, if it costs you more money to purchase a home, purchase a car, now if your taxes are going to be higher, even slightly higher, all that, comes out of your monthly, income bucket. And, we kind of pull it full circle back to what we originally discussed. The best way to invest is to pay yourself first. So, when you get that paycheck, you take, hey, before I buy anything, I'm going to give myself X amount of money, whether it be 10% of your paycheck or 15, 20, as much as you can do, you pay yourself first out of that, and then, spend the rest, but if that, spending bucket gets, of the essentials gets too big, obviously, paying yourself becomes more difficult. And then certainly discretionary spending becomes, much more of a want, not a need. And again, it becomes that cycle of, if people aren't, spending their discretionary money, then, things slow down. You don't need as much goods and services out in the market. And, essentially you get into, recessionary environments, or worse, obviously in extreme cases.
Yeah. Hopefully we don't go all the way to global depression, but who knows? But you make good points. Paying yourself first, because we know savers are losers. And if you're not using what you're paying yourself to invest and increase, as the inflation keeps going up, your discretionary is going to. So you can't just save anymore. You have to figure out how to invest.
Yeah,
there is no choice
exactly.
if you want freedom.
Yeah, and actually, that's a very, very good point. I mean, sticking the, paying yourself first, essentially, and putting it into a, bank account or checking account or even a CD, is very difficult. I mean, that tends to be your emergency funds or things that, you need for immediate, needs, like in the next, 6 months, let's say. Really, to your point, buying some sort of assets, so whether it be, real estate or, partnering in on some real estate deals. I think, nowadays there's a lot more options out there, that folks can research, that you can, get in on, real estate deals for relatively little money as a limited partner, let's say. Or, like you go to the, stocks and bonds side, with
the REITs and all those.
Yeah, I mean, there's lots of opportunities, to, buy, essentially assets. Even in stocks, there's lots of companies that are dividend paying, that provide the basics, that people need. It's always a common in times of distress. People still need to eat. They still need to heat their homes, so there's companies out there that provide those things, and those will be always available in in downturns. So there's ways to make money, in the market, in real estate, etc. If you find the right deals, and keep looking. And to your point, about creating the assets, and it's something that I've been trying to teach my kids, is you don't use the money that you get to buy stuff. You buy assets, and then let the assets pay you. And then once you have enough assets, then when they're paying you, then you can go buy the nice stuff. because you've got passive income from your assets.
Mhm.
So I think that's an area that if, you know, folks can think about and say, how can I buy some assets that generate an income? And then I use that income for discretionary spending, because then it doesn't eat into, what your, let's say daily living or what you need to survive is, and you can use your assets to pay for the fun stuff.
I agree. I use the assets, and on the flip side, we know savers are losers, but you still need to live as frugally as you can to begin with, so you have a little bit extra to invest in those assets.
Yeah,
Like I know
absolutely.
when I first, met my fiance and, we moved in together, we didn't even we used an air mattress for a bed, massage table for our kitchen table. We tried to do everything we could so we could scrimp and save to get to the next step. And then once you get the next couple steps, it's like, okay, you can relax just a little bit, but still be very frugal and minimalistic.
Oh yeah, yeah, absolutely. And there's lots of ways to do that, nowadays. I mean, there's always a couple different ways. I mean, there's obviously, to save and minimize, and again, that's also leads to other benefits, in society. So it's not like you need all these things. A lot of times, the more you have, the more mental stress it is that you really don't need. But even simple things like, and I know you and I both done this, is, you put in a garden. I mean, that's very simple. I mean, packets of seeds are a couple dollars at the store, and a little bit of sunshine and water. And even if you make a very small plot, in your yard, or, vegetable boxes,
Mhm.
for a few dollars, you can, generate, weeks of groceries, albeit they all come at the same time in the summer. But, we have the ability to can and freeze and whatnot. But even just simple things like that. And it's a nice little
Being
hobby and
self-sufficient.
stress relief to go out and, tend the garden.
Well, and you make a good point there, because you have two ways to do it. We can either reduce expenses and increase income, or find ways to be more self-sufficient, whether that's having wind turbines and things for your energy, the garden to help cut down on your food bills.
Oh yeah, and I would say the other thing too is, find other sources of income. And for, the listeners and viewers, I mean, that live in America, I mean, it really is the land of opportunity. I always say, if you can't make money in America, you're not trying hard enough, because there are plenty of things out there. I mean, I saw a service that was being offered here, that someone will come around weekly and pick up your dog poo in your yard. So there's a way to make money. Someone's willing to pay for, to have dog waste picked up, because they don't want to do it themselves. So, there's opportunity out there for sure to, start a business, even if it's just yourself or some folks get together. Actually, I was visiting a vendor of ours, and they started a service that was cleaning trash cans, like your trash cans you put out. And I said, do people really pay for this? He says, oh yeah, we have a couple hundred customers. So, things you don't even think about, are available with a little effort and time, and you got yourself a company.
Yeah, I remember one, there was in Washington here a year or two ago, like a woman started a cuddling service. Like it just, there's an infinite number of ways, write a book, create digital assets, find something you can share and teach, find something, some way you can serve those around you. And the more people you can serve, the more money you earn.
Oh yeah, yeah, absolutely. So yeah, it's finding, really the goal out there is finding an unmet need and servicing it. And again, if you take back a look at the company I work for, it really is identifying unmet needs in the marketplace and trying to, work as a team to build products that fit those unmet needs, because that's where value is created. And so, again, if you're an individual out there and looking to start a business, what are the pain points out there? What are struggles out there, that people are having? And there's a solution there. And to your point, now the ability to publish content is so easy with digital formats. Whether it's a book like your fiance's put out recently, again, very compared to the old days of trying to find a publisher and all that. I mean, it can be done really in a fraction of the time and cost that it had been. So there's really lots of opportunities out there. And I think the challenge is almost narrowing down. Hey, what are what are the things to focus on? Because you can really get lost in all the possibilities that are out there if you have that open mind and really think about what can be done, not necessarily what all the problems are, but think about, hey, what are the things that we can do to fix some of these things.
Well, yeah, see it as a puzzle, make it a game, whatever you got to do to get there, and then find which ones you enjoy and go for it.
Yeah. And ultimately, it's really finding that purpose for your life and what you really make work, not work, whether you're employed with someone, at a company, or, you're doing your own thing as an entrepreneur. What is it that you get up and enjoy? I'll relate back to a story I was having with one of my sons and said, what do you want to do as you're, getting ready to go into college? He says, well, Dad, I want to make a lot of money. I said, okay, well, that's fine. But think about what you want to enjoy doing, because it doesn't matter how much money you make. If you absolutely hate what you're doing, you're not going to want to get up. You're not going to want to go to work and put your time into that. So make sure you enjoy what you're doing. Now, obviously you want to pick something that has the potential to make some money, but again, ultimately should be, something you enjoy doing and get, value and purpose in your life out of.
I agree. When I was still in the rat race, some of my best paying jobs were the ones I hated my life the most.
Yeah. Exactly. I mean, there's, and I think too, if you think about a career as you're working through, obviously I had taken different roles throughout my career in different areas, tended to pick roles that maybe were different than what I had before, or, challenging in some ways. And, in the moment, you're probably like, oh, geez, why am I putting myself through this? But, really, if you think about the learning and the variety of experience that you get, that's something that you can take with the rest of your life. So, I always think to challenge yourself, personally, professionally, maybe take someone's at a company and there's a role out there that no one really wants because it's, difficult or challenging, or maybe, you don't know a lot about the subject, give it a chance. I mean, what's really the worst thing that can happen if you go at it with, full effort and full intention? You never know what, you might gain from that. One of the roles I had taken years ago was a role in compliance. Never thought I'd be in a role in compliance, but it was, an opportunity for some global travel. And, I was able to go to China a couple times, Australia, Taiwan, Brazil, Malaysia, countries that, I would never, have the opportunity to go to, on my own, and was lucky enough to get that opportunity, and, wouldn't change it for the world. And, again, if you would ask me years ago, would I have taken a compliance role? I would have said, no way. That's nothing of my interest. But at the time, it was, kind of right timing. There was a need in the company for someone to fill this particular role. And, I kind of put my hat in the ring and said, yeah, I'll be willing to do it. And, certainly have, lifelong memories from those trips.
Yeah, well, and that's, even if whether you loved or just were okay with the job, you enjoyed the travels, or there were good aspects to it beyond just the paycheck.
Oh yeah,
That created
no,
lifelong experiences.
Yeah, no, absolutely. And actually, once you get in, that particular one, once it got into the role, it was interesting. And, trying to coordinate the different activities of installing a compliance program. So, really took it as an opportunity to educate people as to why we needed to have it, and kind of walk them through that it really wasn't, as demanding on their time as they thought. So, I think any type of role, if you look at, what you can gain from it and what can help other people, ultimately that really makes the job a lot easier.
Well, thank you. Now what's a good way for people to get a hold of you, Steve? Whether it's on social media or business for your consulting stuff, and any last words for, people that what they can do now to help expand their freedom.
Yeah, I would say, best way to reach out to me is either through, they could find me on Facebook, LinkedIn, would probably be the two probably easiest ways to get a hold of me. But in terms of some last words for folks, I mean, we've touched on a lot of topics, but I really think it comes down to, continue to focus on that self-mastery, really identify what you enjoy doing. And then in terms of, becoming, independent, really look at, where your interests lie for investing. I would say, time is on your side. So the sooner you start putting, a percentage of your, income into some sort of an asset, the sooner the better. If you're in your 20s, great, start banking money right now. If you're 30s, 40s, even 50s, just start. I mean, I think some of the things that the government does, at least in the US, over I think age 50, you can start contributing more to retirement plans and different tax, let's say tax deferred or tax free type investments. So, again, take a look at those and start as soon as you can and let time, be your multiplier.
Good. Yeah. Cause it's not just timing the market, it's time in the market.
Exactly. And, if you think about timing the market, I mean, you might as well throw darts. It's better to be in consistently and just let time compound on itself. And before you know it, you're, you've got way more money than you ever thought you would. So, again, I just start early and often is the key.
Awesome. So early, often, doesn't matter whether you're in physical asset stocks, just get your time in and keep going. I want to thank y'all.
Buy assets, buy things that make you money, not things that cost you money.
Absolutely. So make sure y'all like and subscribe for more things on how to improve your freedom. This is Jedi signing off.